What's going on, guys? In today's video, I'm going to show you how I find my daily bias and the next draw on liquidity. This video has been highly requested, and I've been trying to figure out the best way that I can go about doing this. And instead of going slide by slide, screenshot by screenshot, I really do believe the best way I'm going to be able to show you guys is simply by just going to the live chart and showing you guys exactly how I would mark up a brand new week, starting from the beginning of the week, top-down analysis, and that's how we're going to do this thing. So where I always start off with is the 1 week time frame, and we're looking at the E-mini S&P 500 futures chart, and this is going to be what you'll see on my channel most of the time when I'm referencing pretty much anything, but this is what I'm looking for when I'm looking at the higher time frame perspective all the way down to the smallest time frame possible. So I'm basically just looking for, where is price reaching for? Remember, price is only ever looking to do one of two things: either A, sweep liquidity, or B, go rebalance inefficiencies. That's the only two things price is ever looking to do, right? So here's what I'm looking at. I'm looking at that price is reaching for this level of buy side liquidity right up here in the form of an old high, because we can see that price on the weekly time frame has already come down and taken out this recent level of sell side liquidity. So as we're looking at this chart in hindsight, we see that we took out sell side, then we saw that price started working up higher and basically filling all of the inefficiencies and fair value gaps on the way up, and these different points of interest along the way we've kept an eye on. We had this liquidity void right here that we tapped into at the end of January and the beginning of February, and then we saw price react from that level. We saw price then continue to work through that level, and the next draw was right here. Once we got to that high, we took it out, chopped around for a week right at that high, and we've continued to push up through there through to this liquidity void. And as you guys can see, we are now beginning to work through that liquidity void as well. So what I would then do is, I'm no longer looking to reference that liquidity void for the short term. What I'm actually looking to do is find the very next level of inefficiency, or the very next level of liquidity that needs to be filled back in, that's going to bring us to our next point of interest. So here on the weekly time frame perspective, I would expect price to want to reach back down into this fair value gap and then go out and take this buy side level of liquidity. So now dropping down to the daily time frame, we can go ahead and look at price with the exact same thinking in mind. Zooming in here, we see that price has already taken out buy side liquidity with this daily candle, this huge wick up, and then we get price to close right back inside of the range after taking out that liquidity, and we see that price is working back up, filling in this wick. But keep in mind, I still am anticipating that price at some point is going to want to return back down to this inefficiency before really moving higher to that upper buy side level of liquidity that we marked out on the weekly. So now here we go, we continue to drop down in time frames. We see here now on the 4 hour, what is price reaching into? We see that price is reaching into this inefficiency here on the 4 hour time frame. And this is where we are currently, as of me recording this video, is we are actually inside of this inefficiency in price. Dropping down here to the 1 hour, obviously we are going to have to wait for the new week to open up and see, where price gaps to with the new week opening gap. But just a couple things that we can point out here as we've continued to scale down in time frame. Now we're on the 1 hour. This is a 1 hour order block that we are currently just respected, just bounced off of inside of this 4 hour inefficiency. So continuing to scale down here, dropping down now to the 15-minute time frame, we see that we have some low resistance liquidity that is being formed in the form of all of these old lows. We see a low right here, we've got another low right there, we've got another low right here, and then we've got relative equal lows right here. So now I would anticipate that price will begin to work towards these levels of liquidity as we work towards this weekly inefficiency, this fair value gap that I believe we should see remitigate before continuing up to this level of buy side liquidity. But when it comes to finding your bias or your levels of liquidity, your next draw on the smaller time frames, the way that you find that, guys, is always going to be what was just previously ran out on the higher time frames. That's why you always want to start with the highest time frame and work your way down. That's why we started out here on the weekly, okay? And we found what are the nearest levels that we feel need to be mitigated and need to be taken out to then lead to the next move. And then all you are doing, guys, is you're trying to find out where is the next most likely point of interest that we could see price redeliver to before continuing to the next point of interest. So everything we're doing on the smaller time frames is simply our way of trying to frame an idea or a trade opportunity inside of the higher time frame perspectives. Now, granted, we are inside of this big 4-hour inefficiency, and you know what, guys, I don't know if this will hold and we'll see lower prices right from here. None of us know that. All I know is that if this doesn't respect and we go up here and we take out this level of buy side liquidity, which I think could be a possibility that we run the high one more time before heading down to this fair value gap. And you know what? If that happens, then it happens. But I'm only looking to trade price during certain windows of time during the New York session, AM and PM sessions. So, I really have to form my bias based on where we are at that current moment in time. So what I actually want to do right now is I'm going to remove my drawings, and what I'm going to do, guys, is I'm going to go back to our session from Thursday, and I'll show you guys what I'm looking for, generally speaking, when we move into our morning trading sessions. So, in the mornings, I'm trading the silver bullet hour, which is 10 a.m. to 11 a.m. Eastern Standard Time, or for me, I'm Central Standard Time. So for me, that's 9 a.m. to 10 a.m. Central Standard Time. And we've gone back to opening bell. So we've gone back to opening bell, which is 9:30 Eastern, 8:30 Central, my time. And if we come back out here to the 1 hour, the 4 hour, we can see how price has already been moving. And what do we see? We see that price just recently ran out all of these relative equal highs. So we ran buy side liquidity, and if we look over to the left here on the 4-hour time frame, we really don't have anything to the left previous price to even reference or to even go off of. So at this point in the chart, I'm not interested in getting long anymore on a higher time frame perspective. I'm only wanting to find trades that are in the short bias. Why? Because, well, we've ran buy side and there's really nothing else left up here. So I'm expecting a correction, a sell-off to some degree before we continue to push higher to that weekly level of liquidity, right? So coming into the opening bell session on Thursday of this previous week, let's fast forward here a little bit. Like I said, I'm only interested in looking for short opportunities. So as we continue to scale in here just a little bit, we're now on the 5-minute time frame. Let's fast forward a little bit more. We're starting to see price start to displace to the downside, so we can scale all the way in to the 1-minute time frame. I'm usually looking to find my trades on the 1-minute, 2-minute, 3-minute time frames, during the New York session, because that's where I've found the best possible entries with the best risk to reward. And that's just the time frame that I like to trade on, right? So here we go. You might have to bounce around these time frames, guys, sometimes to find like your actual trade entries. But again, like I said, I'm favoring shorts. I'm favoring taking sells at this point on the higher time frame perspective because, well, that's what we are being shown is most likely going to happen on the higher time frame perspective. So as you guys know, the strategy that I like to trade is the ICT 2022 model. So at this point, I'm waiting for that displacement with a fair value gap entry, which we see we get one to form right here. So at this point, I would want to try to get an entry right there if I could, right? But sometimes you're not always going to be able to get that. Sometimes when the floor drops out and you got to find a different way to enter. And, sometimes that's why you have to jump around these different time frames to actually find that entry point. Because if we jump up here to the 5-minute time frame, we can see now that gap that we were looking at on the 2-minute time frame is now a gap on the 5-minute time frame. So not necessarily just to frame any old entry for you guys, but just to show you guys, the smaller time frame being kind of wrapped up into that higher time frame thinking. Now, before our session on this day, you guys can see if we're only favoring sell side, that this was actually an opportunity to get short right here if you were willing to take a slightly more aggressive and more risky entry. And the reason that I would view this as slightly more risky is because this entry right here to get short was not really after any sort of bearish market structure shift. So yes, you could take this entry to get short, and obviously it would have worked out. Your stop loss always needs to go above the high, and then you're looking to target sell side liquidity in the form of lows, in the form of inefficiencies. But as you guys can see, this would have been one entry opportunity kind of at the highest point. And the formation of structure and price right up in here was obviously really choppy, coming into opening bell, coming into silver bullet hour. And then once we got like really into silver bullet hour, we finally saw price really show us its hand in which direction that it wanted to go in, right? So check this out. So price comes back into this fair value gap here on the next 5-minute candle. And then where am I expecting price to go, right? We've already figured out that we've taken out buy side on the 4-hour. Now we're looking at the 5-minute. Okay, well, I'm expecting price to deliver to, you guessed it, sell side liquidity, marking out all of these lows, right? You have the old high right here that was taken out. You've got inefficiency right down here. So you could mark all of this out, all as potential levels of taking profit, all levels that you can expect price to redeliver to with this sell-off now that we've taken out huge levels of buy-side liquidity on the higher time frames, right? And these are all levels that you can just mark out, guys. None of them are necessarily more important than the others. I have the benefit of, hindsight in knowing that just this last week we had FOMC statement release, and a lot of you guys that have traded ICT concepts for a while, you guys know that these big news events are big, significant levels of price that you can expect price to redeliver to and through to sweep these levels of liquidity, because news is the excuse. So just watching this play out, we'll go ahead and hit the play button. You guys can see that price delivers up to that fair value gap 2 different times, and then we sell all the way off and take out this level of liquidity and then some. So that is how I like to find my daily bias and the next draw on liquidity. I know it can be a little bit counterintuitive at first, and that's just because, even though we are bullish, if I reset this, if we jump out of replay mode here, guys, even though we are bullish on the weekly time frame, like I am very much bullish all the way to and through this buy side liquidity level right up here on the weekly time frame. However, that doesn't mean that you're only looking for buys. Sometimes in order to find the best trade, that means that you will have to take a position against your long-term bias, because short-term you're expecting price to redeliver to an inefficiency or sometimes even a recent low before continuing higher. You guys can see, even just looking at this weekly time frame perspective, what do you guys see? Yes, you're assuming price is going to continue up higher to take out these levels of liquidity on the weekly, but what does it do first? It reaches down 2 different times, 2 different weekly candles into this inefficiency, respects it, and then pushes up higher. But the main question that you should be asking yourself is, where are we most likely headed next on the weekly, on the daily, and on the 4-hour time frames? If you have that clarity of mind for the higher time frames, then it's going to be that much easier for you to form a bias here on these smaller time frames and to be able to frame a really high probability position with all of that thinking still in mind. And like I said, we already went over where we are currently at, with current price on the S&P 500, which we are in this 4-hour inefficiency. And again, this could change. This could change in the sense of maybe we'll gap like crazy when this week opens up. I have no idea if we will or we won't. I'm not really too interested in where we open up, simply because I'm not looking to trade it right when price opens up. I'm not looking to trade it at nighttime. I'm not looking to even trade it really during London session. I am looking to trade the S&P 500 during New York Stock Exchange regular trading hours, okay, during AM session and during PM session. So my bias really is important and it's not relevant, I don't even form one until right before I'm about to trade. I look at the chart and I see where are we at currently, where have we been, and where do I think we're about to go next? What needs to be taken out next? What needs to be re-mitigated next? What needs to be rebalanced next? Those are the questions that I'm asking myself, because anywhere around that, anywhere before and after that really is not that important to me, because until right when I'm wanting to be trading, I don't care what price does. I don't care what price does overnight. I don't care what price does during London session. I really don't. All I'm looking for is, where did it go? Did it take something out that was significant, or are we working towards a level that I think is about to be ran out, remitigated, etc.? But yeah, even looking at these smaller time frames right now, I can look at the S&P 500, and this is obviously on the 5-minute time frame. I see that we most recently just took out this low, and we've got displacing price to the upside. So, in the short term, even though we're inside this 4-hour inefficiency, I expect this 4-hour inefficiency to hold, a little bit longer term than just this 5-minute time frame perspective. But I would expect perhaps we come up here, maybe even take out this level of buy side liquidity, maybe chop around overnight, and then as we get into Monday morning AM session where volume really starts to come into the market, finally we start that sell-off to the downside, and we take out all of these levels of sell-side liquidity in the form of these relative equal lows all the way down to this weekly inefficiency. And for the record, once we do get down to this weekly imbalance, we're going to see even more sell-side get taken out, and perhaps another inefficiency filled the rest of the way in as well. And then once price is down into this level of inefficiency, this level of imbalance, at that point, I'm really only going to be looking for long opportunities to go out and take this level of buy side liquidity. And last but not least, coming back out to this weekly time frame, I don't necessarily know when this level is going to be hit. For all we know, looking at the weekly candle, we could expect that maybe price will have a bearish or a couple bearish candles that bring us back down into here before we come up to here. Like, even though this is my next weekly draw on liquidity in terms of where I think price is going to go take out next, doesn't mean that it's going to happen this coming week or even in the next couple of weeks, right? This entire move on the weekly perspective could take the rest of the summer. It could take the entire month of August to actually play this out. So we don't know when, we just know where price is looking to go, and we're looking to frame our ideas on the smaller time frame with all of that in mind. And this will take you some time, this will take you some practice to really get used to looking at charts this way. And you're not always going to get it right. That's totally fine. You don't need to be right all the time. What you just need to do is figure out how you can form your bias based on the way that price is delivering in the markets to where you can be right more than you are wrong. And as you do this enough, as you practice this enough and get the reps and the chart time in looking at price like this and framing ideas inside of these higher time frame perspectives, it's going to help you increase your win rate. It's going to help you increase your confidence. It's going to help you not stare at the charts 24/7 and getting caught in the middle of a bunch of noise on the 1-minute time frame, 2-minute, 5-minute, 15-minute. Sometimes, guys, the best thing you can do is just zoom out and figure out, where are we at? Where do I think we're headed next? And then at the right time of day, put risk on the table in a trade, in a position that logically makes sense to you based on your narrative, based on all the things that you have learned and all the things that you know, implementing these concepts, guys. Remember, price is only ever looking to do one of two things: take out liquidity and rebalance. That is it. That's the only two things price is ever looking to do. And if you start with the higher time frame perspective in mind, work your way down all the way to the 1 minute when you're actually looking to trade during your session, that is how you are going to give yourself the best possible edge in the market long term. But guys, I hope this video helped you. I hope this video served you. I know that this can kind of be a really overwhelming and intimidating topic, and I'll be honest with you guys, it's not necessarily even the easiest to teach, because the way that you're really going to learn daily bias in the next draw on liquidity is just simply spending time on the charts, marking things up from the higher time frame all the way down to the lower time frame, and just letting it play out, watching price deliver to these areas, and you'll see for yourself how this actually does work and how order flow actually does deliver from one point to the next as if it's intended in a program to do so, right? But hopefully this video helped you guys. If you guys have any questions or any comments, feel free to drop them down below this video and let me know what video you guys would like to see next. Have a great day, everybody, and I'll see you guys in the next one. Peace out.